if there was a war or something, they shut the markets, we wouldn't know the price of gold. But I think when the markets reopen, people would realize how important it is to have something.
You're watching Silver News Daily. Subscribe for more.
Imagine waking up tomorrow to find out silver has doubled or even tripled in value overnight. Sounds impossible, right? Well, think again. Mario Innecco, a seasoned market analyst, is revealing why silver could be the investment of the decade and how it's poised to shock the market in ways you wouldn't believe. Stay with us because this might just be the opportunity you've been waiting for.
Back historically, especially in the last 250 years, there's always inflation of the currency during the wars, and after the wars, the currency collapses, or there's like a lot of price rises, which people equate with inflation, and the economy is disrupted because you have millions of people going to fight. I'm not sure that's going to be the same case today, but look at the U.S. Revolutionary War. The continental dollar became called shin plaster. The U.S. defaulted. Well, it wasn't called the U.S. at that time. The Confederate States defaulted. Civil War, you had inflation with the greenbacks. After World War I, you had a lot of inflation, not just in Europe and Germany, but also in the U.S., in the U.K. Same thing after World War II. And same thing after the pandemic, even though it wasn't a war, but the reaction to it from government and the central banks was as if it was a war. And we saw the consequence of it in the last few years, or we're still seeing it, the higher cost of living. So if we go really into a kinetic war, after that war is finished, it's going to be the same kind of consequence, and people are going to be worse off, unfortunately. That's how it always happens in history.
Silver has always been a fascinating player in the world of finance. Its role in human history is unmatched, serving not just as a tool for trade, but as a measure of wealth and stability for thousands of years. Long before paper money and digital currencies, silver coins were a universal medium of exchange, accepted from ancient Greece to colonial America. Unlike many other assets, silver has an intrinsic value that doesn't fade with time. It's embedded in our financial DNA. But here's the kicker. Despite its historical significance, silver is often overshadowed by its shinier counterpart, gold. While gold hogs the limelight as a symbol of wealth and a safe haven during economic turmoil, silver quietly operates in the background, often underestimated by the mainstream market. Yet, experts like Mario Innecco argue that this quiet underdog might be on the brink of a dramatic resurgence. Why is that? It comes down to silver's dual nature, its unique combination of being both an industrial metal and a monetary asset. Unlike gold, silver plays a critical role in the modern economy, especially in sectors like renewable energy, electronics, and medical technology. But its role as a monetary hedge is just as significant. During times of economic instability, when trust in fiat currencies wavers, silver has historically proven itself as a store of value. To truly understand silver's potential, we have to explore its history within the global financial system. Decades ago, silver played a pivotal role as legal tender. It was once a cornerstone of the U.S. monetary system, enshrined in the coinage of the 19th century. Even today, silver bullion and coins remain prized by investors who see them as a hedge against inflation and economic uncertainty. Mario Innecco is a firm believer in the idea that silver's historical role in monetary systems positions it for a massive comeback. He points out how past events, like the decoupling of the U.S. dollar from gold in the 1970s, triggered a dramatic rise in silver prices. Could a similar seismic shift be on the horizon? With the growing global distrust in the dominance of the U.S. dollar, countries like those in BRICS are considering alternatives to the current financial system. Silver, with its monetary and industrial value, could be a key piece of this puzzle. Now, Let's connect this to today's market conditions. We're witnessing a convergence of factors: geopolitical tensions, inflation, and de-dollarization initiatives that mirror the conditions of past silver booms. Could silver be primed to reclaim its historical importance as a hedge against economic chaos? And if so, what does this mean for investors who recognize its potential before the rest of the market catches on? As Mario Innecco often says, silver's value is rooted in history, but its future might be even more extraordinary. Are we looking at a relic of the past or the key to navigating an uncertain financial future? Let's dive deeper into why silver might just be the hidden gem of our time.
If you look at the last few years with the BRICS and also the fact that a lot of the global South countries have been buying a lot of gold, and that we've been hearing from Russia that they want to build a new monetary like system outside the dollar system, and I think that's that the U.S. doesn't want to give up the privilege of running the world's currency and payment system that easily. Even President Trump, who professes to be pro-peace, says that he's going to punish countries with 100% tariffs if they trade amongst themselves in their own currencies, which sounds a little bit strange, because if Indonesia and India want to trade in their own currencies, why should they trade in dollars? But so yeah, that's the other thing. This faction, the banking faction, the financing faction, and I noticed as well recently that the BIS, they've abandoned this M-Bridge project because they've seen that Russia has kind of used M-Bridge to create this another M kind of system within the BRICS. So, and we don't know, Elijah, what we're told publicly of what's happening might be just like a cover. And behind the scenes, these factions, be it Chinese, Russia, US, EU, UK, they're trying to work out who's going to do what, financially. But the thing is, these attacks from the Ukraine now with these new missiles from the US and the UK, well, it helps those companies that produce these missiles. So it keeps the military-industrial complex going. Wars as well are really expensive, and you can use the excuse of, they're attacking us to get the public behind you. You might even start selling some Liberty bonds like they did at World War I to keep financing the debt. So yeah, ultimately, unfortunately, it's like all wars are about money and also the health of the state. I've said that before, that wars are the health of the state. And when the state is in trouble like it is now, and by state I mean like the US, the UK, and the EU, when we have so much debt, the government is so big and people are waking up, war is a way to rally people behind the state. So it's not just a banker's war, but a statist war as well. It doesn't scare me, all this talk of war, because what can you do about it? And, that's the way I look at it. And a lot of it is to make you scared, to not live your life without fear. So that's how I see it.
To understand why silver might be poised for a breakout, we need to take a closer look at the current market dynamics. Right now, the global financial landscape is shifting dramatically, and silver finds itself at the intersection of these changes. One of the most significant factors driving this is the de-dollarization efforts spearheaded by BRICS nations: Brazil, Russia, India, China, and South Africa. These countries, collectively representing a substantial portion of the world's population and economy, are seeking alternatives to the US dollar as the dominant global reserve currency. Why does this matter for silver? because the BRICS bloc has floated the idea of introducing a gold-backed currency to reduce their reliance on fiat money. While gold often takes center stage in such discussions, silver isn't far behind. Historically, when gold prices rise due to monetary or geopolitical shifts, silver tends to follow suit, often outperforming gold in percentage terms, due to its lower price point and dual role as both a precious and an industrial metal. Mario Innecco highlights another crucial point: the growing instability of fiat currencies. With central banks worldwide printing money at unprecedented levels, inflationary pressures are mounting. This has historically driven investors to seek out tangible assets like silver and gold as safe havens. Silver's affordability makes it especially attractive to retail investors looking for a hedge against economic uncertainty. But there's more. The resurgence of silver isn't just about its monetary value, it's also about its industrial applications. The metal plays an indispensable role in cutting-edge technologies, from solar panels to electric vehicles, making it a key commodity in the transition to green energy. Recent market data shows that demand for silver in these sectors is skyrocketing, setting the stage for a potential supply crunch. Here's a question to consider. If BRICS nations move forward with a gold-backed currency, could silver become a secondary pillar of this new financial system? After all, silver's historical role as a medium of exchange and its increasing importance in industrial innovation make it uniquely positioned to benefit from these seismic shifts. This is where the market gets particularly exciting. With these economic trends converging, silver is no longer just an overlooked asset, it's becoming a critical player in the global financial story. As Mario Innecco suggests, when silver moves, it moves fast, and the market is starting to wake up to its potential. So, what are your thoughts? Could silver's dual role as a monetary and industrial asset make it the ultimate beneficiary of these global shifts? Share your perspective in the comments below, and don't forget to subscribe for more insights on this fascinating market evolution.
The current administration wants to make it harder for the Trump administration to bring peace to Ukraine because the Democrats and the globalists, they've pumped so much treasure and energy into Ukraine, mainly to really bring down the Putin regime, because they're after Russia, really, not like physically, but control of Russia, because, and I think they're going to lose, unfortunately. And we sent some, the UK sent some of these shadow, I forgot the name of the missiles, and I had to look at it, and it's made by actually a company that is partly owned by Airbus, which is French, BAE, which is British, and also an Italian company. So, Storm Shadow is called, the missiles. And Putin replied by firing one of his new missiles as well into Ukraine. And we kind of wonder, what is the prime minister here doing? He's really trying to he's really poking the bear. And I guess we're lucky that President Putin is, he hasn't really fallen for it. But if we provoke him a lot more in the West, something could happen before January 20th, and it could be a lot harder, because for Trump to engineer some kind of peace between Russia and Ukraine.
One of the most compelling aspects of silver is its indispensable role in today's industrial and technological advancements. Unlike gold, which is predominantly viewed as a store of value, silver is a critical component in a wide range of cutting-edge industries. From renewable energy to electric vehicles and advanced medical devices, silver's utility is growing exponentially as the world transitions to greener technologies and more sophisticated electronics. Take solar energy, for instance. Silver is a key material used in photovoltaic cells, the technology that powers solar panels. With the global push toward renewable energy to combat climate change, the demand for solar panels, and by extension silver, is expected to skyrocket. In fact, the renewable energy sector already accounts for a significant portion of silver's industrial demand, and this number is only set to rise as governments around the world ramp up their green energy initiatives. But that's just one side of the story. Electric vehicles, EVs, another booming industry, heavily rely on silver for their electrical systems, from battery connections to circuit boards. As more countries introduce policies to phase out fossil fuel-powered cars and promote EV adoption, the demand for silver is projected to soar. Analysts have noted that this surge in industrial demand could create a significant supply crunch, especially if mining output doesn't keep pace. Now, here's where things get interesting. While industrial applications are driving silver demand to new heights, the metal's monetary aspect remains equally compelling. Mario Innecco often emphasizes this unique dual role, explaining that silver is not just a commodity, it's a hedge against economic instability. This duality means that when the market is strong, industrial demand supports silver prices, and when the market falters, silver's safe haven appeal comes into play. Let's not forget the challenges facing silver supply. Despite its growing industrial demand, mining output remains relatively constrained. Top producers like Mexico, Peru, and China are struggling to ramp up production, partly due to stricter environmental regulations and logistical challenges. Meanwhile, global reserves of silver are finite, and extracting it becomes increasingly expensive as high-grade deposits are depleted. This sets up a potential supply-demand imbalance that could drive prices even higher. Here's a thought to consider. Could silver's dual role as an industrial powerhouse and a monetary asset position it as one of the most versatile investments of our time? And if so, how might this affect the broader financial market? As Mario Innecco puts it, the industrial revolution of the 21st century is built on the backbone of metals like silver. Its importance is only beginning to be understood. What do you think? Is silver's industrial demand the key to unlocking its true value? Let us know your thoughts in the comments, and if you're enjoying this deep dive, don't forget to subscribe for more insights.
Yeah, and just to go back a little bit on this, if there was a war or something, they shut the markets, we wouldn't know the price of gold. But I think when the markets reopen, people would realize how important it is to have something physical. As for the price, I'm kind of surprised how quickly gold, silver not so much, but how gold has rebounded. And it's even made a new high today in British pound terms and in euro terms. Yeah, the dollar is strong against the fiat currencies, but I think ultimately you need to measure the dollar versus gold. So the dollar is weakening again. Some people think there might be another wave down for the gold price. That's possible. But what it shows is that the higher we go, or in the gold price, the more, exciting it's going to get. And that's why you shouldn't get excited and you shouldn't get despondent when you get ups and downs. Maybe try to buy a bit when you get these big move down, if you can, if you have some spare fiat currency. I mean, I bought some gold a week or 10 days before the last move down. So I didn't really catch that correction, but now the price is higher than when I bought it. So you just have to do your best, because it's more about protecting your the long-term viability of your savings. And unless you're trading, of course, and that's a different game. You should just try to keep dollar cost averaging. Silver, that's rebounded today as well, but it's still way undervalued. I still like silver. It's frustrating though, but one day, hopefully, it will unshackle itself from the supply of paper out there.
Silver's rising prominence in industrial applications is only one piece of the puzzle. Another crucial factor is the growing interest from central banks and institutional investors who are beginning to see silver as an essential asset in the face of global economic uncertainty. This renewed demand from large-scale buyers is creating a perfect storm that could further drive silver prices upward. Central banks, particularly in emerging markets, have been increasing their reserves of precious metals, with gold purchases hitting record highs. While silver hasn't historically been a primary focus for central banks, its affordability compared to gold and its growing industrial importance make it an attractive alternative. This shift is especially significant as nations in the BRICS bloc seek to diversify their reserves away from the US dollar. Mario Innecco has pointed out that silver's appeal as a hedge against currency devaluation and geopolitical risk is beginning to resonate on a global scale. Institutional investors, too, are waking up to silver's potential. Exchange-traded funds, ETFs backed by silver, have seen a sharp increase in inflows, signaling heightened interest from asset managers. This surge in ETF activity is crucial because it reflects a broader sentiment shift among investors who view silver as an undervalued asset with significant upside potential. Mario often remarks that smart money moves early, and the increased demand from institutions could be a precursor to a larger market movement. Now, let's talk about retail investors. With inflation fears mounting and economic instability becoming a global concern, more individual investors are turning to precious metals to safeguard their wealth. Silver's lower price point compared to gold makes it an accessible entry point for those looking to diversify their portfolios. Unlike fiat currencies, silver offers a tangible, finite asset that holds intrinsic value. One of the most intriguing aspects of this silver renaissance is its potential role in the ongoing de-dollarization movement. As BRICS nations explore alternatives to the dollar, could silver become a key player in this new financial paradigm? Its dual utility as both a monetary asset and an industrial powerhouse positions it uniquely in this unfolding narrative. Here's a question to ponder. With central banks, institutional investors, and retail buyers all turning their attention to silver, could we be witnessing the early stages of a historic shift in the precious metals market? As Mario Innecco aptly puts it, silver is not just a hedge, it's a statement about where the future is headed. What's your take on this? Could silver become a cornerstone of the global financial system? Share your thoughts below, and remember to subscribe for more insights into this exciting market development.
All the financial markets, and by that I mean you have to trade through brokers and stock exchanges, futures exchanges, or ETFs. They would be affected, yes, if they had to, if they said the undersea cables connecting Europe and New York it's been hit. They've been hit. Yeah, the markets would cease to trade. People wouldn't know. They wouldn't know where prices were. So yeah, physical gold though wouldn't be affected, even though you might not have a price set by COMEX or the LBMA in London. But the ETFs or anything that's has a counterparty attached to it, a fund, a fund manager, a bank, that will be halted for however long they think is necessary. And that happened during World War One. When World War One broke out in 1914, even the New York Stock Exchange, even though the U.S. wasn't in that war, that closed for a few months. It's very much possible. In terms of price, we don't know. We would have to wait until they reopen the markets, and it happened recently, Elijah, back 23 years ago after 9/11. They closed the markets. I don't know if you remember that for a week or so, for some days, and then it started trading again.
One of the most fascinating aspects of silver's market dynamics is how it thrives on both investor sentiment and real-world utility. As silver gains momentum among institutional and retail investors, we also see its safe haven appeal intensify during periods of geopolitical and economic uncertainty. But what makes silver truly unique is how it bridges these two worlds, providing both a financial refuge and an industrial necessity. Consider the geopolitical tensions dominating headlines today. From rising conflicts in Eastern Europe to the ongoing economic tug-of-war between the U.S. and BRICS nations, the global landscape is increasingly unpredictable. Mario Innecco often highlights that during such periods of instability, silver shines as a hedge against uncertainty. This is not merely speculative. History shows us that precious metals, especially silver, perform exceptionally well in tumultuous times. But there's another layer to this story: the way silver acts as a bridge between tradition and innovation. While gold is traditionally seen as the ultimate safe haven, silver's industrial applications in high-growth sectors like renewable energy and advanced technology make it an essential part of the future. This dual appeal is why analysts are calling silver the metal of the 21st century. Let's not overlook the role of investor psychology. Recent surges in silver ETF and futures trading point to a growing belief that silver is undervalued and poised for a breakout. As Mario Innecco puts it, when fear takes hold of the market, investors flock to what they can trust, and silver has proven itself time and again. This sentiment creates a feedback loop. As more investors pile in, prices rise, which in turn attracts even more interest. However, the industrial demand for silver adds a critical twist to this equation. Unlike gold, silver isn't just sitting in vaults. It's being consumed. Every ounce used in solar panels, electric vehicles, or medical devices is effectively taken off the market, reducing available supply. This unique dynamic makes silver both a defensive asset in times of crisis and a growth asset in periods of industrial expansion. Here's something to think about. Could silver's dual role as a safe haven and a growth driver make it the ultimate investment for the modern era? And as geopolitical tensions continue to rise, how much longer can the market ignore its potential? As Mario Innecco suggests, silver's story isn't just about the past, it's about the future, and the world is waking up to its importance. What's your perspective? Could silver be the key to navigating these uncertain times? Let us know in the comments, and don't forget to subscribe for more insights into this evolving market.
I actually interviewed John Perez, and he told me about that. I hadn't really thought about that. And most people think that communications is done via satellite, but no, it's done through undersea fiber optic cables. There's millions of these cables running. I'm not sure if it's millions, but hundreds of thousands under the oceans. And it could be an excuse for the powers that be if they get into trouble market financially wise. They can say, oh, the Russians, they sabotaged this cable, so we're going to have to close the markets for a week to fix it because we can't communicate. And I saw there's a story the other day of a cable between Finland and Germany being damaged. And at first, the speculation was that it was Russia, but now I've seen that they're accusing the Chinese for having done that. And there's also, I guess, aside from undersea cables, and these undersea cables are important because, let's say, London, Paris, Frankfurt, they communicate with New York, the banks, they keep track of all the transactions, futures, derivatives, foreign exchange. There's 7.5 trillion, I think, of foreign exchange transactions every day. So can you imagine if that were to stop? But we've spoken about this probably in the past, and you have as well on your channel, about this cyber pandemic. That's another thing they could do. And I think that's another interesting way to wage war. It's not as deadly, but it could be as deadly because it could disrupt a lot of the supply chains, and we could end up with very little basic necessities of life. So, yeah, it's not as bad as a nuclear war, but the effect won't be very good either. So, yeah, that's how I see that.
To fully grasp the magnitude of silver's potential, it's critical to unpack the insights of Mario Innecco himself. As a seasoned analyst, Mario has been vocal about the often overlooked dynamics that make silver not just an asset, but a strategic opportunity in today's volatile market. His analysis centers on the convergence of industrial demand, monetary instability, and global de-dollarization efforts, all of which are setting the stage for a silver rally unlike anything we've seen before. Mario points out that silver operates in a sweet spot between scarcity and necessity. On one hand, global silver production has remained relatively flat due to environmental and logistical constraints in mining. On the other, demand is surging from industries like renewable energy, electronics, and electric vehicles. This imbalance creates a scenario where even modest increases in demand could send prices skyrocketing. But it's not just about industrial use. Mario emphasizes silver's historical role as a monetary asset and its potential resurgence in this capacity. With nations like those in the BRICS bloc exploring gold-backed currencies to counterbalance the US dollar's dominance, silver could naturally complement this shift. Gold may lead the charge, but silver will follow closely as an indispensable ally, Mario asserts. His reasoning: silver offers a lower-cost entry point for smaller economies and retail investors while maintaining intrinsic value. Mario also highlights a key market behavior that often precedes major price movements: the smart money effect. Institutional investors are quietly accumulating silver assets, betting on its dual utility as both a safe haven and a growth commodity. This insider activity often signals a larger wave of interest that can trigger significant price rallies. As Mario notes, when you see the smart money moving, it's only a matter of time before the market catches on. Then there's the psychological aspect. Silver is often referred to as poor man's gold, a term that downplays its significance but underscores its accessibility. In uncertain times, silver appeals to a broader base of investors who are priced out of gold but still seek a hedge against inflation and economic chaos. Mario argues that this affordability, combined with its industrial indispensability, positions silver for exponential growth. A question to consider: could silver's unique position at the crossroads of industry and finance make it the most underappreciated asset in today's market? Mario believes so, and the growing data seems to back him up. As he often says, silver doesn't just reflect the past, it holds the keys to the future. What do you think? Is Mario's analysis on the mark? Or are we still underestimating silver's true potential? Let us know in the comments. And if you're finding these insights valuable, don't forget to hit subscribe and join the conversation.
The billionaires, I've heard they've got places in New Zealand or like underground bunkers and somewhere. In Switzerland, for example, even though it's a neutral country, every house has a underground bunker, so they're prepared. I mean, how do you prepare for a nuclear war? It's a question that it's hard to answer. You just have to hope and pray that it doesn't happen. Back in the 60s, they told the kids in school to get under their desks and cover their heads, which isn't much use. But I think unless you you're very wealthy, you can't. I'm not sure you can prepare. Maybe in terms of prepping, you have some extra food and water at home, because wars could disrupt like supply chains, or they definitely will disrupt supply chains. I think here in the UK I don't think there was during World War II rationing a lot of stuff, because they couldn't ship a lot of the foods into the UK. into Britain. So yeah, maybe prepare by having some more water and food put away because of a supply chain problem.
While silver's potential as an investment continues to gain traction, it's not without skepticism. Critics often question whether silver can truly outperform gold or other assets in today's complex market. But Mario Innecco doesn't shy away from addressing these doubts head-on. His approach is grounded in data and historical patterns that suggest silver may, in fact, be the sleeper asset poised for dramatic gains. One of the most common arguments against silver is its volatility. It's true, silver's price movements can be unpredictable, and this deters some investors. However, Mario views this as an opportunity rather than a drawback. He points out that volatility often precedes significant breakouts. When silver moves, it moves fast, he says. In other words, the very characteristic that makes silver seem risky also gives it explosive potential. Another point of skepticism revolves around silver's lower liquidity compared to gold. While it's true that gold enjoys broader recognition in a more established market, silver's increasing industrial demand is bridging that gap. Mario argues that the sheer scale of silver's applications in technology and renewable energy is rapidly transforming it into a more indispensable commodity. This, he says, will ultimately enhance its market appeal and liquidity over time. What about the argument that silver is merely a secondary precious metal? Mario challenges this notion by highlighting silver's unique dual role. Unlike gold, which primarily functions as a store of value, silver is an essential industrial input. This duality means silver benefits from both economic growth through industrial demand and economic uncertainty as a safe haven. Silver isn't just playing a supporting role, Mario asserts. It's a leading actor in its own right. Then there's the criticism that silver mining can't keep up with demand. While this is often viewed as a limitation, Mario sees it as a catalyst. The constrained supply, combined with surging demand, creates a textbook case for a supply-demand imbalance. This imbalance, he explains, is precisely what could drive silver prices to unprecedented levels. Finally, Mario addresses a broader concern, the global shift in monetary systems. With BRICS nations and other emerging economies seeking alternatives to the US dollar, silver could play a pivotal role as a complementary asset to gold in these new systems. We're at a turning point in financial history, he says, and silver is positioned to be a key player in this transformation. Here's a thought to leave you with. Could the very reasons skeptics doubt silver be the same reasons it's set to explode? As Mario Innecco often reminds us, the market loves to surprise us, especially when we least expect it. What's your take? Are these concerns valid, or is silver ready to prove the doubters wrong? Share your thoughts below, and don't forget to subscribe for more in-depth analysis and market insights.
Yeah, because under a fiat currency system, the bankers, they can lend $100 at 4%, 10 times or more. A farmer with $100 worth of land, they can only make 2 or 3% return a year, and they have to work really hard. So if you count that over a couple of centuries, you can see how the system really favors the bankers and those who deal with credit and money, and it harms the people who deal in real things like farmers. And the other reason the farmers, I'm not even sure they're thinking about what I said, but the big reason they're protesting is that the family farms here are going to be liable now to the inheritance tax. And it's really hard if you have to pay inheritance tax to pass the farm on. You know, farms that have been, sometimes I've heard, like 4, 5, 6 or more generations in the family. You're going to break those farms up. You're going to, destroy the family farms, which are really important. And again, who's going to benefit from that? Well, people like Larry Fink of BlackRock, and he was here yesterday actually meeting the UK cabinet at Downing Street. And people are getting suspicious, Elijah. They're putting two and two together, you know, because that's the World Economic Forum agenda. They don't want small farmers. They want like farming regions. Like for Europe, I think they want one place, like in the Netherlands. They have very fertile and productive farmland. So they want to make like that the center for all food. And what's the best way to do that? Well, you destroy the family farms. Hopefully, the protests will stop this, but I'm not too sure they will, because these people are determined. You know, the people who run things.
As we reach the apex of this discussion, the question remains: why should you seriously consider silver as not just an investment, but as a cornerstone of your financial strategy? Mario Innecco argues that silver is not merely a relic of the past. It's a dynamic asset uniquely poised to thrive in the challenges of today's global economy. And when we break down the circumstances, the reasoning becomes clear. First, let's look at the supply-demand equation. Silver isn't just a commodity. It's a necessity for industries shaping our future. Solar energy, electric vehicles, and advanced electronics all rely heavily on silver. Simultaneously, mining production isn't keeping up with this demand. This isn't just a short-term issue. It's a structural imbalance that could push silver prices significantly higher in the years to come. Second, there's silver's role in the shifting monetary landscape. With BRICS nations actively pursuing de-dollarization and alternative reserve systems, silver stands out as a viable player alongside gold. Its affordability, accessibility, and historical use in monetary systems make it an ideal complement to gold in this new paradigm. Could silver become a key pillar in a gold-backed currency system? The signs suggest it's a strong possibility. Then there's the hedge factor. In a world of inflation, geopolitical instability, and unprecedented monetary policies, silver's dual identity as a precious and industrial metal makes it a rare asset that thrives in both economic growth and downturns. As Mario often says, silver is the bridge between the old and new economy. But perhaps the most compelling argument for silver is its untapped potential. Historically, when silver rallies, it outpaces gold in terms of percentage gains. This is partly due to its smaller market size, which makes it more sensitive to shifts in demand. With institutional investors, central banks, and retail buyers all beginning to recognize silver's value, the market could be on the cusp of a dramatic revaluation. Now, the big question: what does this mean for you? Silver represents more than just an opportunity for growth. It's a chance to protect and diversify your portfolio in uncertain times. Whether you're looking to hedge against inflation, invest in the future of technology, or capitalize on silver's potential as a monetary asset, the case for silver has never been stronger. As Mario Innecco puts it, silver isn't just about price, it's about positioning yourself for what's coming next. The choice is yours. Will you wait on the sidelines or seize the opportunity before the market catches on? If you found this deep dive insightful, make sure to hit subscribe for more market-shaping insights and analysis. And remember, this is not financial advice. Always do your research before making investment decisions. But one thing's for sure, the silver story is far from over, and the next chapter could be the most exciting yet.